methodology to get you into a trade is not enough. For you to be able to execute that edge without making errors, you're going to have to learn how to trade from a carefree state of mind, meaning you're going to have to aspire to the point where you can trade without fear. And to trade without fear, you're going to have to learn how to think in probabilities. That's basically where we're going here.
Very briefly, I just want to mention that we do not have to trade without emotions. I feel like the whole trading without emotions thing is misinterpreted sometimes. We don't learn how to stop feeling, we learn how to not let our emotions cloud our judgment. We change the way we react to how we feel. We do not remove the way we feel. Sure, repeated exposure to something that makes us nervous or scared reduces those feelings over time, but part of that is because we learn how to deal with it, not because those feelings just stop entirely. Let's say you're scared of spiders. How effective do you think it would be if I wrote you a persuasive essay on why you shouldn't be scared? Right, not effective at all. That's because those feelings don't stem from something logical. I can't logically convince you to not be scared of spiders. There are no magic words to fix it. There are facts and there are feelings, and they often conflict with each other. But feeling is what makes us human. Where am I going with this?
We're going to set aside or move from thinking in a trade-by-trade mentality. In other words, what this trade is going to do for me right now, am I right or wrong on this trade? And we're going to move to a series of trades perspective, because that's what your methodology does anyway.
The individual trade isn't as important as the end result of all those trades combined. In order to see if something works, the sample size has to be large enough to accurately make conclusions from it. I won't talk more about that though, since research methods is very boring. Probably made a couple of you fall asleep just by saying research methods.
It requires a complete shift in the way you think about trading. When you make this complete shift, everything about your trading will change.
You already know that every system fails, and that in 20 trades, some of them are guaranteed to be losers, and you don't know which ones it will be. But it's still important to take a broader perspective. That doesn't mean ignoring how we might have prevented a losing trade, though.
The market is not a good arena to be doing this, by the way. Okay, this is not a good area to be working these kind of emotional issues out. Go ahead.
This was after talking about a guy who had the biggest loss of his life. The previous night, he had a big argument with his wife. I think you all know that trading after some negative event is a bad idea. Even if you're just a little upset or frustrated, it's probably in your best interest to just step away from the computer. We already know how badly emotions can cloud our judgment. This is especially important for those of you who experience higher levels of emotions, which is referred to as neuroticism in personality psychology. It's not a bad thing, but you do have it tougher than people like me. Check out my Dealing with Neuroticism video if you haven't seen it. There will be many more videos from personality psychology in the future.
Because most really good traders keep pretty extensive journals about what they're doing and what they're thinking while they're doing it. Develop the ability to recognize if you've crossed the threshold from normal self-confidence into a state of euphoria. You guys are laughing.
When self-confidence becomes euphoria and delusions of grandeur, that's when we take catastrophic losses. We lose the ability to manage risk because we end up in a state of mind that is elevated into a different reality. That's part of how I lost a bunch of money in the beginning. I thought I was a genius. Reversion to the mean happens with our emotions too. We can go from euphoria from a win streak or big win, and then devastation from a loss, where we eventually return to the middle. Like Mark said,
it's like going literally from a state of mind, it's like literally going from heaven to hell instantaneously. Learning to trade without fear, hesitation, or internal conflict is a function of believing that you don't have to know what's going to happen next on a trade-by-trade basis to win or make consistent money. This is the heart of it right here, everyone. Okay? When we're operating out of unrealistic expectations, we're going to tap into 4 primary trading fears that will cause all the errors that we make as traders. Those fears are the fear of being wrong, losing money, missing out, and leaving money on the table. And those fears will actually cause us to perceive these up and down ticks as threatening. If you don't predefine the risk in advance, you're operating out of the mindset that you think you know what's going to happen next.
Stop losses and profit-taking levels should be defined before the trade, not during it. Our emotions will usually overcome the rational part of us, which leads to staying in losing trades. More on that from my Why We Stay in Losing Trades video.
We got a real problem here because our minds are naturally wired to associate. In other words, our minds will automatically make connections.
Yes, our brains seek patterns in everything. We look for correlations, connections, and other things that help us make sense of the world. It's part of how we learn. With this comes something called illusory thinking, which I will just briefly mention. This is where we make connections where they don't exist. Ever heard of knock on wood, jinx, or karma? I don't want to interfere with religious beliefs because I have no problem with that. But knock on wood? Are you telling me that there's some supernatural force that is going to jinx me if I don't touch a piece of wood with my knuckles after making some statement? Pair that with confirmation bias, and this is why people believe in these things. They ignore when karma doesn't happen. They ignore when They ignore when not knocking on wood doesn't stop something good from happening, and they continue to wear a lucky pair of socks because last time they wore them, their favorite sports team won. It sounds ridiculous when I say it, but almost all of us do it. I stop myself from saying these things in real life because I'm not going to be that guy who's like, actually, that's confirmation bias paired with the human tendency to create connections between two unrelated events. Why don't I share these things? Because I like having friends. This deserves its own video, so I'll just leave you with this. Be careful about making connections between two events while trading. Most of what happens is random, which makes our pattern-seeking brain make everything more complicated. Really think about it. If there is a connection between who wins the football game and which pair of pants you're wearing, then what does that imply about the universe? What does that imply about you? Are you God? I think that part of why we do these things is because it helps us feel in control of things that we have no influence over. Who knows if there is a correlation between the desire for control and superstitious behaviors, but that would certainly be an interesting research topic. On an unrelated note, have you noticed that you barely ever see really old people who are really tall? Short people tend to live longer. Anyways.
If I get into a trade and I end up being wrong, I expect it to win and I'm wrong. I have to admit that I'm wrong. It isn't just admitting that I'm wrong on this one trade. Our minds, because the way our minds are wired, it has the potential to tap us into the accumulated negative energy of every time I've been wrong in my life.
I'm going to assume he's talking metaphorically rather than literally because that's not true. If he means it in the sense of taking a really bad trade can have a negative effect on our self-esteem, which could lead to making us feel bad about ourselves, then definitely. But there's no accumulated energy storage part of our brain. Trading would be very difficult for people with low self-esteem, if those people are associating the result of each trade with the perception of themselves. Accumulated negative energy isn't the scientific way to say it, but if he's referring to self-esteem, then sure.